Welcome to our exploration of the Bank of England, the historic institution that has shaped the financial landscape of the United Kingdom and beyond for over 3 centuries. Join us as we journey through time, from the bank's humble beginnings in 1694 to its current role as the cornerstone of the British financial system. Please don't forget to like and subscribe. The Bank of England stands as a testament to centuries of financial innovation and economic evolution. Established in 1694, it holds the distinction of being the world's first central bank, a pioneering institution that would shape the course of modern finance. Its origins lie in the tumultuous economic landscape of late 17th century England. The nation was embroiled in costly wars, burdened by heavy debt, and plagued by a lack of stable currency. It was against this backdrop that a group of merchants and politicians came together to propose a solution: the creation of a national bank. The Bank of England holds a pivotal role as the central bank of the United Kingdom, wielding significant influence over the nation's monetary policy, financial stability, and economic well-being. Since its establishment in 1694, it has evolved to become a cornerstone of the British financial system, entrusted with critical responsibilities that shape the trajectory of the economy. At its core, the Bank of England is tasked with maintaining price stability and controlling inflation. Through its Monetary Policy Committee, MPC, it sets the benchmark interest rate, known as the bank rate, to achieve the government's inflation target. By adjusting the bank rate, the Bank of England influences borrowing costs, spending, and investment decisions, thereby steering the overall level of economic activity. In addition to its role in monetary policy, the Bank of England serves as the lender of last resort, providing liquidity to financial institutions in times of crisis. Through its role as a regulator and supervisor of banks and financial markets, it ensures the stability and resilience of the banking sector, safeguarding against systemic risks and promoting the safety and soundness of the financial system. Furthermore, the Bank of England plays a crucial role in issuing and managing the nation's currency. While it no longer issues paper banknotes directly, it oversees the issuance and distribution of banknotes by authorized commercial banks, ensuring the integrity and security of the currency supply. Beyond its domestic responsibilities, the Bank of England also contributes to the international economic landscape. As a member of various international forums and organizations, it collaborates with central banks and regulatory authorities worldwide to promote financial stability, coordinate policy responses to global challenges, and facilitate international trade and investment. Throughout its illustrious history, the Bank of England has been intertwined with a myriad of significant historical events, shaping and influencing the course of British and global affairs. From wars and financial crises to economic booms and technological revolutions, the Bank of England has stood as a stalwart guardian of financial stability and a key player in navigating the turbulent waters of history. One of the earliest pivotal moments in the Bank of England's history came with its founding in 1694, amidst the backdrop of the 9 Years' War. Established to provide stable financing for the war effort, the bank's creation marked a crucial turning point in the evolution of the British financial system, laying the groundwork for its future role as the nation's central bank. In the following centuries, the Bank of England would play a central role in financing wars and military campaigns, including the Napoleonic Wars and both World Wars. Its ability to provide liquidity to the government and stabilize the financial system proved instrumental in sustaining the British economy during times of crisis and conflict. Moreover, the Bank of England played a pivotal role in navigating financial crises and economic downturns, such as the South Sea Bubble of 1720, the Panic of 1825, and the Great Depression of the 1930s. Through its interventions and policy measures, the bank helped mitigate the impact of these crises and laid the groundwork for recovery and growth. In the realm of monetary policy, the Bank of England has been at the forefront of innovation and adaptation. From the adoption of the gold standard in the 19th century to the abandonment of fixed exchange rates in the 20th century, the bank has continuously evolved its approach to monetary management to meet the challenges of a changing economic landscape. The Bank of England operates within a structured framework that reflects its multifaceted role as the central bank of the United Kingdom. Comprised of various departments, committees, and governing bodies, its organizational structure is designed to facilitate the effective execution of its responsibilities and ensure the smooth functioning of the financial system. At the helm of the Bank of England is the Governor, who serves as its chief executive officer and is responsible for overseeing its day-to-day operations and strategic direction. The Governor is supported by the bank's Court of Directors, which acts as its governing body and provides oversight and guidance on key policy decisions. One of the key decision-making bodies within the Bank of England is the Monetary Policy Committee, MPC, which is responsible for setting monetary policy to achieve the government's inflation target. Comprised of bank officials and external experts, the MPC meets regularly to assess economic conditions and determine the appropriate course of action regarding interest rates and other policy measures. In addition to the MPC, the Bank of England operates several other committees and departments focused on various aspects of its operations. These include the Financial Policy Committee, FPC, which is responsible for monitoring and addressing risks to financial stability, and the Prudential Regulation Authority, PRA, which oversees the regulation and supervision of banks and financial institutions. Furthermore, the Bank of England is organized into several operational divisions and functions, each responsible for specific areas of activity. These include divisions focused on monetary analysis and research, financial markets operations, banking services, and currency issuance. Beyond its internal structure, the Bank of England also collaborates closely with external stakeholders, including other central banks, regulatory authorities, government agencies, and international organizations. This collaborative approach ensures coordination and cooperation across the financial sector and helps to promote financial stability and resilience. As we embark on the journey of the 21st century, the Bank of England faces a myriad of challenges that require innovative solutions and strategic foresight to navigate successfully. From technological advancements and globalization to climate change and geopolitical uncertainties, the central bank must adapt and evolve to meet the evolving needs of the economy and society. One of the key challenges facing the Bank of England is the rapid pace of technological change and digital innovation. With the rise of fintech and digital currencies, the traditional banking landscape is undergoing a profound transformation, posing new challenges and opportunities for monetary policy, financial regulation, and payment systems. Moreover, the increasing interconnectedness of global financial markets presents another challenge for the Bank of England. As financial institutions become more interconnected and interdependent, the risk of contagion and systemic crises grows, necessitating enhanced coordination and collaboration among central banks and regulatory authorities worldwide. Climate change is another pressing challenge that the Bank of England cannot afford to ignore. As the impacts of climate change become increasingly evident, they pose risks to financial stability and economic resilience. The central bank must therefore integrate climate-related risks into its risk assessment frameworks and promote sustainable finance initiatives to mitigate these risks. Geopolitical uncertainties and trade tensions further complicate the operating environment for the Bank of England. With Brexit and other geopolitical developments creating uncertainty and volatility in financial markets, the central bank must remain vigilant and adaptive in its policy responses to safeguard stability and promote confidence in the economy. Furthermore, demographic shifts and socio-economic inequalities pose long-term challenges for the Bank of England. As populations age and income disparities widen, the central bank must consider the implications for monetary policy transmission mechanisms, financial inclusion, and economic prosperity. In the face of these challenges, the Bank of England must demonstrate resilience, agility, and foresight in its policymaking and operations. By embracing technological innovation, strengthening international cooperation, addressing climate-related risks, and promoting inclusive growth, the central bank can contribute to a more stable, sustainable, and prosperous future for the United Kingdom and its citizens. As we wrap up our exploration of the Bank of England, we've delved into its rich history, significance, and challenges. From its founding in 1694 to its role in the 21st century, the Bank of England remains a pillar of stability and resilience. Thank you for joining us on this journey. Please don't forget to subscribe and like this video. Stay tuned for more insights into the world of finance and economics. Until next time, keep exploring and stay curious.